Welcome to Upside, where we dig into the real stories that live behind the headlines affecting European venture. Today is Mads, Lomax, and my good self, and we're talking about defense. We're talking about the spend and the startups. Is there a moral line to be drawn? OpenAI launches another product. Are we at peak LLM? Is there an implicit message here? We will see. Does working from home kill culture? And what's different for startups? We're going to check in on Taco Trump's tariffs, making some euro-based decisions and some predictions. H1 UK startups check in on the stats. Not a massively exciting section, but are they good or not so good? We're going to have to take a look at that. Big tech in Europe. Will they continue to serve us, or is all this EU fining and forced control just a bit too much for big tech coming into Europe? Before we start, Lomax, what's new? You had a big party last night. What's happening with you, dude?
So, having done the soft launch of our office last week, we did the big launch this week. We had 15 people over for breakfast and a co-working session and a surf session. And then we had 55 people over for drinks and pizza, which was awesome. Founders, GPs, LPs in the Lisbon ecosystem. And the office is officially launched. So if you want to come and work on the beach, the only venture capital office on this side of the Atlantic on the beach, come and work and surf after work.
Well done.
That's a tagline, isn't it? Surf after work. Mads, what's happening with you, dude?
That's been an exciting week. We're preparing for some great events for the second half of the year. Lots of founder-focused activities, lots of good new accelerators coming up, focusing on different sectors, different verticals, lots of good partnerships with large corporates that are hungry for innovation and keen to meet the innovators of today and tomorrow, and willing to connect all the dots. So yeah, just getting that, ready ahead of sort of a second half of the year.
Nice. Andy Rue, what's cooking?
Well, I don't have an office on the beach, so that was very cool. Full marks to Lomax for excellent branding. Was in London for a lot of the week. Went to the Bessemer Investor Summit. There were lots of very cool UK defence startups there, including Greenjet's one of ours. Give them a plug. So yeah, that was good. Lots of talk about how to get rid of those pesky Russians.
Nice. Well, we are going to talk about defense. In fact, I think defense is first up. So let's crack straight into defense. It is the new sliced bread. It is the new kid on the block. It is the case that most investor and startup pitch decks have pivoted to include some kind of defense angle. Now, personally, I'm a pacifist. I hate the thought of some of the things that we're about to talk about, but I also know that the world is a very imperfect place. And if we want to see our children happy and healthy, we have to think like this. It feels like Europe has woken from this slumber to the reality that the world is a dangerous place. And it feels like it's been a key driver of investment, as you were just mentioning, Andrew. It feels like it's been this kind of key recent driver in activity in Europe. So let me break down some of the figures. In June, Europe tech companies secured 6.5 billion euros across 323 deals. The UK leading that pack with 30% of the total, 18% up on May. Now, at the same time, loads of capital inflows are still rotating in from the US, piling into Europe, but it's a different story depending on which European country you are, and I am including the UK in this bucket. So Germany, France, Spain, Italy, all on the same vectors up. The UK, the same proportion down. We're the only country significantly in the red compared to everyone else on the continent who's attracting in new capital. However, as a smaller side, the FTSE 100 hit an all-time high, which is lovely. So we'll take it. But really, Germany is leading the charge. This Q2, Germany overtook the UK for investments into startups for the first time, mainly driven by deep tech, defense, quantum computing, energy, robotics, aerospace, and therapeutics. Many of these investments being able to be labeled as defense and or resilience and or dual use. So Andrew, I'm going to lean on you first. How do you define defense, resilience, dual use? How do you look at those three buckets?
I think you nailed it at the beginning. There's a bit of a bandwagon here, right? Some people build on a mission basis when they do their startups and they have a clear problem they want to solve. Others tend to be a bit of a weather vane and they'll try and repackage themselves, either as a fund or as a startup, depending on what's most fashionable at the time. So, but I think that's just inevitable when you've got an industry that attracts a lot of money. People are going to run after it. And resilience is really anything that helps us defend what's important to us as a society, as a country, and that's all the way from democracy down to the practicalities of kinetics, right? How do we How do we shoot something out of the sky that we don't want landing in our back garden? And so that is a wide remit. I mean, for us as a fund, we look at stuff which is all the way from cybersecurity to future compute. AI, as we've already seen in a small part, AI drone-driven swarms, which are a new part of the battlefield. But ultimately, AI will impact our GDP, our wealth, our freedom. And if you don't have control of that, or rather if someone else has control of that, that has huge connotations. So resilience itself is a big remit. The whole
does defense sit does defense sit under is resilience the mothership?
Yeah,
how do you
I think so. That's how I view it. And I think the dual use defense, this sort of differentiation, to some degree for me is a bit of a red herring. I think startups require focus when you go to market, and there's an argument to say that if your primary customer in your first bridgehead market is a defense vertical, you should focus on that, even if your technology has potential in civilian use later on. However, if your bridgehead market where you can maximize margin and initial impact and go to market is civilian, and you might have defense use cases later, then you should probably go that way. So I think people get tied up, and there are investors who say, oh, I wouldn't invest in a defense-only startup. But I think it's sort of missing the point a bit. And the point is the vision for the business big enough that this is a venture scale business? And that may or may not include dual use or not. There are venture scale businesses, if you want to become a new aerospace prime like Green Jets, where you're an Anduril, sure, their technology could be used for civilian use cases, but they may never need to, because they might be a multi-billion-dollar solutions company just in a defense vertical. But I think there aren't that many of those, and we'll probably talk about this later. But one of the challenges with investing in defense is a lot of the companies are point solutions, which means they're great for the woman or the man on the ground who want to solve a problem as a soldier or as an intelligence expert or as somebody else in the armed forces. But how do you turn that into 100x return as a seed investor? How do you turn that into a multi-billion-dollar business? So for me, you apply the same criteria as you do for any startup you invest into. The execution is sometimes different, because isn't it always? But
yeah. Okay, cool. Thank you for that. Mads, is this rotation all defense?
Well, certainly a lot of it is. I mean, if we look at the DAX 40, which is sort of the largest German companies, they're up 22% year to date, which is a phenomenal performance. And of those, kind of the sub-segments, if we look at those, 30% up for the industrials. And that's really driven by rearmament. It's the Rheinmetalls, it's the Airbuses, and to some extent also the Siemenses of this world. But we're also seeing a strong uplift in financials, especially banks. They're up 16%, driven by easing rates that have let banks sort of keep the better spreads and keep better profit margins. And tech is up 14%, driven by AI, which is SAP. They've had a strong AI ride. And then chips for EVs, where Infineon has done really well. On the other hand, automobiles are sluggish, due to China. Pharma is down, cost pressures, thin pipelines. So we have seen a mixed market, but it's been very defense-driven, the German boom.
Lomax, how should startups think about defense? Is this a place to rush into?
Well, I very much think of the old, Buffettism here being, be fearful when others are greedy, right? From the investor lens. And the same thing applies to, I think, founders rushing into a new space. Because looking back over, let's say, just to take some examples in the last 5 to 10 years, building in climate was supposed to be obvious at some point. Building in the future of food was obvious at some point. Biotech was obvious during COVID. Biotech is dead at the moment. Future of food, most of those companies are dead. And climate is obviously going through a massive reset at the moment. So when something is obvious, running towards it is not necessarily the best thing to be doing. Now, there may be some differences here because, of course, we are seeing, a potential doubling of defense budgets in the European Union over the next 3 to 5 years. And these are long-term decisions that once are made have, long-term impact, and they could be built into, let's say. They're not as ephemeral as, more consumer-driven things like food. However, there are particular challenges to building in defense, So I think, yes, the budgets are increasing. I mean, don't forget that you take the headline number, which potentially in in the EU will be in the hundreds of billions, potentially even up to the $1 trillion mark at some point. But only a very small section of that goes into R&D, into technology. It's probably say 5-10%. And then also there are huge complexities here. You're selling into governments. There's a limited number of buyers. In the EU, there's joint procurement. So, it's actually even smaller number of buyers. The startup timelines are much shorter than government timelines. So to hit your value inflections can be extremely difficult. It's a small investor universe. And there are, of course, opportunities here. But I think proceed with caution. And it's also a highly regulated space as well. There's lots of challenges from a startup perspective to building a new company in this area. But, for those that have the stomach and the grit, the resilience, to throw that word back in, there are, of course, opportunities.
I want
for me, just sorry,
go on, Andrew. No, go.
I was going to say, for me, it comes back to, are you solving a super painful problem? And that doesn't matter whether you're a defense buyer or whether, you're selling direct to consumer. So if you've got a 10x, 100x better solution, you're going to find buyers and you're going to find success if it's a painkiller and not a vitamin. And right now, with war in Europe, it is more and more a painkiller. And I think the macro trend, medium to long term, is not going to change. If anything, it's going to get worse. And I've spoken to some investors who say, well, what if, the Ukraine, what if there's a peace deal in Ukraine and then all this excitement will go away? And it's like, well, not unless Putin gets replaced and not unless China have a 180 reversal of their current strategy, which is to take back Taiwan, and not unless you're going to undo history, which is that warfare is never going to be the same again. And every single Western military is not equipped currently to fight a modern war with the drones, with the technology it needs. And that's before you get onto the other fundamental issues of European defence, which you've touched on, Lomax, around our lack of capability. I said before, just look at anything. Europe has 8 military satellites, I think, maybe 10. America has over nearly 250. We can't actually defend ourselves unilaterally right now. We simply did not have the equipment. And for a lot of people, a friend of mine was talking at a defence conference in Bristol just this week. And she was horrified, even amongst the military that were there and the defense industry, as to how uninternalized the threat from Russia was. Mm-hmm. The fact they didn't really understand what was going on. They didn't understand the level of propaganda in Russia against the UK. It's perceived as a war somewhere else. It's perceived as a not urgent problem, and that just
they're mostly
isn't the
proxy
case.
wars, aren't they? I think we've been shielded by the fact that we're in a proxy war environment, and with the NATO extra kind of, the Americans will run in and save the day, and Trump has obviously squashed all that. But I've got an annoying question for the room. Mads, maybe you can kick this off. So I know we talk about this in Supersede Towers. Is there a moral line to be drawn in investing in defense?
I think it's a good question to ask, and I think it hits on the many of the same topics that Andrew brings up. I think the truth is that for too long, us Europeans, we thought that we were above all this martial stuff and that we sort of could sleep under the protective blanket provided by the US. And then suddenly we realized that the world is more complex. Now, Europe can most certainly stand up to Russia, but we do have to make an actual effort. It's not going to come by itself. And personally, I'm sort of a dyed-in-the-wool classical liberal. I'd love for us just to focus on peace and free trade and do business and none of this weapon stuff. But we have to acknowledge that history didn't end in the 90s, much to the chagrin of Francis Fukuyama and everybody else that was around at the time. And so we've got to be ready to defend ourselves. And in that context, I don't think there's anything wrong with making defense technology to protect our citizens, to protect our way of life. In fact, I think you can argue that we have an obligation to do that.
Mm-hmm. Absolutely, we have an obligation. I mean, it's just it's a sin that we've got this far and haven't protected ourselves. What's the Winston Churchill quote? An appeaser is one who feeds a crocodile, hoping it will eat him last. And essentially, not a lack of strength is a form of appeasement because it invites aggression. I think that's I think Ronald Reagan quote, as well, something about, we maintain peace through our strength, and weakness only invites aggression. And that's exactly what has happened in Ukraine, because we didn't do anything about Crimea. We preferred to have cheap gas. We now have a war in Ukraine. And within 3 to 5 years, Russia will be strong enough to operate more than one war. They'll be able to go into Moldova or somewhere else. And so if we don't start sucking up the reality of spending taxpayers' money, on defending ourselves and being able to defend ourselves, then this is only going one way. And we've seen it over and over again over the last hundreds of years.
It'll be interesting to see what happens with BRICS and how that grouping comes together. And I've seen the increase in use of the yuan, and so let's see. I think there's some interesting challenges. A podcast for another time. I want to move on. I want to move on to OpenAI and them launching yet another product. My kind of broad kind of contextual thinking was: are we at peak LLM because OpenAI is now doing 1,010 things, or have they got more money than God and can do whatever they want, or what the hell's happening? But just a little bit of background. So they're launching a browser in the coming weeks. I hardly use Chrome these days. I mainly use ChatGPT. I think many people are starting to blend their search and their online requests around these LLMs. I remember the transition from Alta Vista to Google search in the early 2000s, which was pretty much overnight. There's this better thing. There's zero loyalty. You just move on. And it feels like Google may well be, even though they felt unseatable, it felt like they could never be replaced. It feels like there might be somebody knocking at the door. Google has 3 billion users compared to OpenAI's 500 million active weekly logins, and only 3 million business users. 3 million business users in OpenAI. But OpenAI is really opening up on the products and services. They've got the Johnny Ive product team. Let's see what happens with them. They launched a consultancy product, and now they're offering a browser. There are obviously more things afoot. Mads, I'm going to lean on you for this one. What's next? Is this smart? Where would you, if you were Sam Altman, what would you do with the business?
So first question is maybe why a browser? Is it peak LLM, and is it just something we're doing because we can? And it's maybe worth asking why the browser is valuable. And why is Chrome so valuable to Google? Well, if we think about Google, I mean, it's one of the greatest companies of all time, and Chrome is a key part of providing data for Google's ad revenue, especially around search, which is a $200 billion annual business, 75% of Google's revenue, but maybe most of their profit. It's so profitable. And as you said, Chrome has 3 billion users, huge market share. And what the browser allows Google to understand is much more than just seeing the queries. It's seeing shopping patterns. It's seeing browsing patterns. It's seeing all the stuff that happens outside search. And of course, then knowing the full picture means they can do a lot more. And so if we look at OpenAI and what that might be worth to them, well, if you go back as recently as December last year, the CFO said, look, there are no active plans for ads. But then we also know that they hired Kevin Vale from Instagram, or from Meta, who built Instagram's ad platform. We know that they hired one of the leaders from Google who was leading around the search ad business, although he left shortly thereafter. But we saw in spring, as late as I think as April, that they were expecting $1 billion in revenue from ads already in 2026, and $25 billion in ads from 2029. And if you look at OpenAI today, they have a low rate of monetization. I think it's less than 10% of users are monetized. So certainly these LLM queries are very, very expensive. Massive number of users are not paying anything. They're on the free model. And so ads are an obvious way to go, and the browser can be a really, really valuable extension of the capability of OpenAI to understand what users want and therefore serve them the right ads. So if I was Sam, this is exactly what I'd be doing. I think it's a smart strategy.
Lomax, is this going to be the new search engine war?
I think so. I think it's a hugely exciting time to be alive in tech history. In a way, it's having Google basically have this monopoly over the last 20 years, and people wondering how this could ever end.
Because they own a shed ton of the market, right, Google?
Of course, yeah. I mean, 70% of the market. I would get your popcorn out, and this is an extremely exciting contest to which we have front row seats, and we'll be playing and testing with these tools and learning and active participants in. So I think it's a seminal moment in it feels like, there's a risk of hyperbole. We talk about seminal moments probably every week at the moment, but I seriously think this is big. And Perplexity now coming out with its own browser, Comet, which they've announced, and no doubt we'll see more. So I think the wars are just beginning.
What will be the outcomes, do you think? And this is an open question for the room. Lomax kickoff. Where is this going to end? Who's going to win? Who's going to lose? What does this mean for startups? Any direction you want to take?
I think, well, firstly, what does it mean for startups is like, well, this sort of old like SEO playbook of which, there has been built over the last 20 years is virtually going out the window now. So in terms of how you optimize your own distribution through search, we're now talking about, GEO rather than SEO, generative engine optimization rather than search engine optimization. We are literally at the thin end of the wedge of that. We are only just beginning. I think, just as an example, that there was a seed deal announced, I think it was this week, for a company, and I think it's in Germany called PKI, which is working on this solution. So, as always, look at what's going on at the seed level to see what's going to be built in the future. So that's a company that helps startups in this domain, or helps customers in this domain. So yeah, I think if you're using or you're using, this affects your distribution, the whole playbook has changed. I think one thing I would say in terms of impact on startups is it's also a big macro lesson for startups, which is that monopolies do not last forever, which is great, because otherwise we wouldn't be in business probably. And monopolies are great until the format changes, the UX changes, the platform shifts, and suddenly, all bets are off. And actually, I think this is a great lesson for all of us and for everyone, is you could never give up hope, because things change. And now we have this massive segment up for grabs.
Well,
and you can be pretty certain of when the platform change comes, because that's when the DOJ, always busy fighting the last war, puts on the thumb screws, right? Yeah. IBM with the mainframe, Microsoft with the Windows and the browser leading to mobile, and now, of course, with Google and search, and we have LLMs coming out.
And if you were building now, what would you build?
In AI or anything at all?
Anything.
Ooh,
he wants to build a defense.
Yeah, I was going to say I probably know the answer to this.
He wants to build a giant howitzer. Is what he.
I want sovereign
Supergun.
Control. I want
Supergun.
infrastructure.
Iraqi Supergun 2.0.
Attached to a satellite. Yeah.
I definitely think about defense. This whole "are we peak LLM"? I love that expression, and I've just got this inkling that, to Mads's point, this could just flame out overnight. Right? How far can you take LLMs? And when I've made a real effort the last month to sort of almost overuse LLMs like ChatGPT and Claude, and I've been using it for all sorts of things I wouldn't normally bother with. All the way from simple things like negotiating something with somebody, to issues with friendships, to asking it, using it, to your point, Dan, instead of Google as a search, and it really is very flawed still. It forgets stuff. It forgets things you've told it literally the day before. It can't retain consistent memory patterns. It's actually like dealing with a young kid that has early onset of some description. It's because it's just so inconsistent, and yet it's so confident. And so you've not only got hallucination, but you've got complete inconsistency. And I don't know how it feels like technically a sieve that you're going to continually try and plug the holes in to fix that. And so my hunch is that we're in kind of, I don't know if I've used this analogy before on this pod, but we're back in the days of the search the search portals, where everybody thought for about 4 or 5 years, everybody thought it was all about portals, and they were stuffing everything in there: sports results, share results. You can remember, Alta Vista, Hotbot, all the Yahoo, and then overnight along came Google and said, "You've got it all wrong. This is about getting people off our website as soon as possible, as fast as possible." And the underlying efficacy that was better was the citation engine, the page rank, which is how many things point to this page about this topic through a hyperlink, which talks about the topic that the page is supposed to be about. And that just destroyed everybody overnight. And I can't help feel that there is a better proxy for a brain out there, and how brains think and how human intelligence thinks, which is going to be better than an LLM, which could just wipe all this off. And it might not be for 5 years, but I can't believe this is the end point. I think this is the start point. And so I'm very skeptical about how long LLMs will last. I can't believe there is not a better foundational technology out there.
Sure. Well, I mean, we're only 2.5 years in, right? I mean,
Yeah.
November 22. So
This is all. This is all one big experiment, guys. Seriously. I mean, with tens of billions of dollars being burned.
Well, hundreds, I would argue.
Wow, yeah.
But Mads, there's been a bit of foundational shift this week with Grok, the latest edition of Grok taking over the benchmarks. Do you know anything about what's going on there?
Yeah, so this is Elon Musk launching Grok 4 just 5 months after launching Grok 3. And there's been lots of controversy around the Grok models. They've been slightly unhinged. There's been anti-Semitic rants, etc. And essentially what's doing is there's sort of a decision that's been made to say, look, architecturally, LLMs, they're great, but they just don't have recent information. So Grok is hooked directly up to X. And the challenge is, in terms of the design parameters, the decision around Grok is to make it very free speech, sort of very much of a free speech absolutist. And so this leads to obvious data quality issues when you take everything that flows through X with few guardrails.
Cesspool of X.
Yeah, exactly. And you pull that into the model. But the thing is, these are design choices, and they're actually quite easy to correct if the will is there. And so I think it's worth going behind the headlines and sort of some of the emotion to look at the model itself. And it genuinely looks like state of the art. It has immediately entered the top of all benchmarks. It's the most expensive, one of the most expensive models out there. So 2 versions, you've got Super Grok at $300 a year, and you've got Super Grok Heavy at $3,000 a year. And what's interesting about the Heavy version is it spins up multiple models that investigate the best answer. So a lot of, if you look at the takes of the implications here, is that a lot of the performance is coming from throwing an awful lot of compute at things, which is why the model is expensive. And who does that bode well for? That bodes really well for NVIDIA. If you think about it, right, if we are all going to use a lot more compute for inference, so when we ask the questions as opposed to just when we train the models, well, that means we're going to need a lot more silicon to run those models.
So, and they hit 4 trillion, right?
They've hit 4 trillion. They've hit 4 trillion. And there's going to be, this I think is really indicating a trajectory here and why people are and keep being so excited about that company. On the model side, the pace of evolution is extreme. If you look at OpenAI, the time between GPT-4 and GPT-5 is likely going to be about a year and a half. And so compressing that model iteration that the Grok team has done down in 5 months is extreme. And it's a lot down to having the Colossus, kind of this supercomputer that they built. So OpenAI, they've had Sam Altman, he's had a difficult week, right? He's got Meta stealing his top employees from one side, and now
they're all bed hopping. Everyone's bed hopping everywhere.
Musk, he's targeting him from performance on the other side. It's a very, very important week for AI.
And I also feel for the aggregator startups. I've seen a whole bunch of startups aggregating the models so that you don't have to work out which one to go to. But it sounds like Grok is basically leading the charge of, don't worry about it, we'll work out what you need from the request. But
meanwhile, under the covers, sorry, Lomax, meanwhile under the covers, it's worth remembering that OpenAI is now at plus 10 billion in run rate revenue. Anthropic has, since we talked about this a few weeks ago, scaled from 3 to 4 billion in run rate revenue. Yeah. So the growth is off the charts.
But there's no loyalty, right, man? There's no loyalty.
Nope,
so people will just shift and move.
Well, we say none whatsoever, but the truth is those 2 companies that got out of the gates first and have created, if not loyalty, then at least some stickiness, are really the ones that are taking the lion's share of the revenue. Google is still trying to play catch up, keep publishing great benchmarks, but just can't seem to keep up from a revenue perspective with OpenAI and Anthropic.
Interesting. Lomax, you were gonna.
No, I was just gonna say, well, on Anthropic, you saw that chart in the I think a Kochi put out a presentation recently, basically showing the time that it took for Anthropic to go in increments of 1 billion of revenue. It took 20 months to go to 1 billion of revenue, then 3 months to go from 1 billion to 2, and then 2 months to go from 2 billion to 3. So it's just like incredible the growth. No, I was going to say, just an observation, is there's something wonderfully like Muskian about Grok, isn't it? It very much seems to embody
being a
like,
national
move
socialist,
fast.
you mean?
The creator.
It just embodies move fast and break things. No, it's like the embodiment of it. And I feel like Grok is going to run into issues, and Grok is going to run into issues with our friends in the EU at some point. You know, probably also because he's bundling it with X, right? So that's also going to be an issue with that.
Well, it feels like all of his businesses are buying each other and then doing within deals. So I think maybe we'll have just like one monster X entity.
Although SpaceX, I saw, is now 400 billion as of this week. So you know, I mean, the guy's obviously, again, the guy's an absolute machine. But I just think there is just something about the kind of he's going to be called before Brussels. He'll probably, you know, turn down the invite, but they'll
give it the double fingers, right?
I know, exactly. But there is just something sort of wonderfully on brand about Grok. From
another question for the room: does working from home kill culture? So I guess first up, we need to kind of define what culture is. There's been a few reports, thoughts. Obviously, AI is making some inroads into how companies are thinking about resourcing. And I think it's accelerated some of the conversation. So the question for the room is, does working from home kill company culture? Anyone want to have a pop? Don't be shy.
You've got to have a culture to start with. And I think the problem with a lot of companies aren't even at first base of having a proactively intentional culture. Cultures tend to evolve in a lot of startups, and they tend to reflect the leadership.
But what is it, Andrew? What? How would you define culture?
I think it's expected behaviors, and I think if your team understand expected behaviors between each other, so internally and then externally with your customers, and those are clear, then that builds a consistent culture, because it builds a consistent prerequisite prediction on how someone's going to respond. And
but it's got to be more than just values. It can't be just values. Lomax, how would you define culture?
I think the reason, just on that point, Dan, I think the reason why I didn't say values was because values can be defined, but unless they're turned into actions, they're meaningless. And that's the problem with most cultures. Like most cultures, here's our set of values. And then it's like, well, that's not my experience dealing with this company, or this person at this company, or this person in my team in this company. And that's why I always use the expression of a set of behaviors, not just a list of values.
To answer your original question, I'm not a bit. I don't think it works like work from home. I really don't. I think it's very, very hard to build.
Agreed.
Big companies. You know, as I said, like if you're trying to grow a company from 0 to 250 million of revenue in 5 to 6 years, which is this sort of artificial kind of growth that companies go on with it, you know, with fueled by venture money, which is not the normal kind of growth in a say a bootstrapped company. And even those need to have their own culture, and from which working from home, it's hard enough in those kind of companies too. But I think it's too hard. I think all of this is too difficult, and I think you need to be together. And I'll give you, in the context of myself, like I was running our firm, which is a small venture fund, right? We were running it remotely, and now I live in the same city as my partner, and we've just built an office together, which I keep going on about. But I'm like, the improvement in everything we do since I've seen us sitting in the same room doing things. This is a very small example. It's just been like 10x. It's been, and I'm sorry, like there is occasionally, if you have culture cemented at the beginning by working in person, the move to a sort of, part-time working remote can work temporarily. But I just think great things don't come from working remotely. I'm very skeptical about it.
Let me just tee up. I'm going to tee up where it all came from, because I was quite intrigued as to when it started, how it started. So here's a quick history lesson, and then Mads, I'm going to lean on you for some of the exceptions, because I know there are some. Working from home was labeled in the early 70s as telecommuting, which was labeled by a NASA engineer, Jack Niels, in 1973 as a response to the energy crisis and traffic congestion. Then in 83, IBM allowed 5 whole employees to telecommute. And within 4 years, that program hit 2,000 workers. But just for context, in that bucket, there were at the time around 400,000 employees in IBM. So a bit of a drop in the ocean. In the US by 2005, 20% of the workforce could work flexibly, but even by 2019, only around 6% were working from home. And then obviously COVID rewrote the rule book, and it was about 50% working from home by mid-2020 for all the obvious reasons. Now, many firms like Uber are now trying to claw back employees. We see stories in the press, Goldman's and others trying to get this come back to work, with potentially some of them using it as a sneaky request to weed out those that are committed to the company and are not. So, Mads, you and I talk about this a lot. I'm going to hand over to you for in the fundamentals, does working from home work?
Well, I think there are exceptions to everything. I mean, I think fundamentally, as you say, greatness happens when great people come together in person to make magic. There are exceptions. We've seen companies like GitLab. I think they have 1,400 employees. They're fully remote. It's been a successful business. There's Automatic, which is the company behind WordPress. A couple of thousand employees, no offices. It's also been successful. And then there is the big one, really the poster child of a fully remote culture, if you will. And Toby Lütke from Shopify, he took the company remote first, and that is seen as a big success because Shopify is such a behemoth and such a successful company. And I'd say when you hear Toby speak, and also when you hear his chief operating officer, Cass Najashian, speak, they've sort of said, look, we've invested insane amounts of resource in setting this up so that it works. And I think Cass had said that for 90% of companies, remote is a terrible idea. It's just too difficult to implement. So there are exceptions, but I'd say in most situations, it probably isn't the right thing. So the truth is, you can, to some extent, maintain culture remotely if you work hard at it, but why handicap yourself? Olympic athletes, they don't train over Zoom. Why would you try to do that?
I think Zapier's full remote, if I remember correctly as well. There's a few, but it is the exception to the rule. Andrew, is this sector specific? Because they're obviously all hyper geeky, successful businesses. So is this a case of if you've got a bunch of backroom guys punching keyboards, that's okay. But if you're more culture centric, and obviously we're talking about the financial results as well as the cultural results. There's two vectors here. But is it sector specific, do you think, Andrew?
I think it's less than 10% when we looked at it before. I think it was less than 10% of companies, successful companies. I don't know if that's 250 million ARR or Lomax or what it is, but were remote or even fully hybrid. My experience has certainly been that if you need a bunch of senior people, and that's for lots of reasons, I think older people tend not to need the same level of human interaction, possibly, or face-to-face time that a 20-something expects. That's for lots of reasons, right? Who do you end up going on dates with, or you end up snogging someone at the office party? I mean, these sound trite, but actually, you spend so much time working that for someone...
You're not supposed to do that anymore, are you?
I was going to say, I want a confession.
It doesn't happen? Come on.
I want a confession. When was the last time you snogged someone at an office party?
When was the last time I went to an office party would be a better question. The answer is over a decade ago, I should think. So I think for people coming up in their career, all the things you learn through just the casual interactions and the small interactions are absolutely vital, all the way from learning how to interact, to manage up, to manage down, but also just the knowledge transfer that you need. You just don't get that if you're remote. So I suppose there's two big factors. If you want to do it, first of all, you've got to be even more intentional about everything than if you have everyone in the same office. And that goes all the way from culture through to process. And, what a startup's bad at? Process. And that's good because they can move fast and break things. But you also need to know what the hell's going on with your team. You also need to know whether people are performing. You need to performance manage them. So I think you need more process in a way, not less, if you are remote or even if you are hybrid. And the second big thing in startup world is just competition. When you're trying to turn every marginal gain into a win over your competition so that you win and become the multi-billion-dollar company solving the problem you're solving, if everybody else has even a marginal advantage because they're doing it in the same place and you have a disadvantage because you're remote, then you've got to seriously question whether you're just handicapping yourself. Now, there are counter arguments to that because you can say, well, if my pool of employees is global and, but otherwise my competitors are just in London, they're stuck with London wages and London people, you might argue that there's a counter advantage. But in my experience, the startups we have in our portfolio that spend a lot of time in the same place do seem to have less problems and move faster and move better.
Lomax, last question on this one. Does culture drive commercial success?
Yes.
Okay.
I don't have enough. Yes. Yes.
Haven't it? That's super short and quick. That means we can move on.
1,000%. And there's nothing I could say to cut across that. What I would say is I don't invest in a company if the founders aren't together. I just passed on a company that was quite compelling the other day, and it became clear that,
and I agree with that completely.
It's impossible.
Yeah. Okay. Well, let's move on. I do want to do the unthinkable, and I do want to just check in on Trump's tariffs. I know it's probably the most hackneyed topic
You're an addict.
there is. I know. It just feels like I want to do a very, very quick check-in, just a very quick status update and a very quick check-in and see if any of this is going to come around and bite our backside. So we are recording on Friday the 11th of July. So here's where we are so far. It's been 3 months since Liberation Day back in April. Trump's pitch at that time was 90 deals in 90 days because everyone wants a slice of American pie. That was an awful American accent. Sorry about that. He hasn't hit his target. I think I can only see 1 deal and 2 half deals. So Vietnam, UK and China in some guises. The deadline came and went for the EU. It's been extended to August. Brazil has just been slapped with 50% because Trump doesn't like the new guy. I've read all the stories, but I think that's basically where it lands. I also wanted to have a look at how much income the US takes from tariffs. And it has taken a fair chunk over the years, between 20 and 40 billion annually between 2008 and 18. That jumped in 2018 to 24 from between 60 and 80 billion, peaking at 100 billion under Biden. So Besson and the Trump admin are looking to target 300 billion this year in revenue from tariffs, but you can't have it both ways. Either you have American produced things in America, or you're getting tariff income. You can't have them. You can't have your cake and eat it. So, and also, Lomax, there's a question for you. Nothing happened with markets this time. So just looking from the outside, obviously all these threats of tariffs and, we're going to come and get you, and only a handful of deals, but markets didn't move a bit. Is it just that we don't really care anymore? Don't believe Trump, believe he's going to be a taco dude? What's the deal there?
Yeah, it's either basically priced in or it's just priced out, as in it's just ignored. I think the impact of it, when we looked at the impacts of the tariffs at the beginning, and people were running around like headless chickens. I mean, we had an M&A deal that fell over in the first wave of the tariffs, right? Like stuff was happening, both at the micro and macro level, and clearly at the markets level. We saw US markets suffer a lot with the original wave of tariffs, but now I think people are like business as usual. This is Trump doing his thing. And also, markets at the moment really reflect, it's not just policy. I think they're reflecting on what's going on underneath. Strong earnings growth, the AI boom, etc. They're reflecting that rather than any kind of policy discount or haircut. So yeah, I think it's business as usual as far as the market's concerned.
Mads, what's next? Kind of the global piece, and if you can tie it back into Europe, what's gonna come?
Well, I think if there's a truism about Trump's trade policy, it is that nobody knows anything, right? We're all sort of a little bit in the dark, and he sort of runs off in multiple directions. But what are some likely outcomes? I think you could possibly see scenario one, maybe that's what we can call the fudge scenario, where we actually end up staying at the 10% baseline tariff. You're probably not going to get below that. Trump might claim that the EU made concessions and regulatory enforcement and maybe carve out some exemptions for specific things. Both sides managed to save face. There'll be minimal economic impact. I think this is still the most likely scenario. But there is another scenario, which is more of a selective escalation, where you are going to end up seeing 15 to 25% on specific sectors, likely especially those sectors Trump really cares about. So maybe some of the luxury goods, some of the auto sector, right? Some of the cars, that's his favorite target, and maybe pharma, which is also one he's got his guns out for. So, and then potentially 10% for everything else. I don't think we're going to see a universal 50% tariff on everything. I think it would just be impossible. I think it would crater the U.S. economy. The EU is a massive trading partner. It would drive so much inflation for Trump, and that's not what he wants. So Yeah, I think it's going to be somewhere between sort of the not very much and sort of a slight selective escalation.
Andrew, what does this mean for Europe, UK startups investing? Are there any gotchas?
I think it just changes so quickly. I think what's interesting is, where does this all stem from? And almost on a weekly basis, you see economists far smarter than me trying to pick apart what's its strategy behind it. And I think that it's all based upon the madman strategy. If you look back at the sort of the late 60s, early 70s, and Richard Nixon, and this is a sort of a theory popularized by himself, that if a political leader cultivates an image of irrationality and unpredictability, that can intimidate opponents, you can extract concessions, they can fear sort of disproportionate results or retaliations or really erratic decision making. And his tariffs and his approach and the speed at which things change all feel to me part of his wider political approach, which is just to do that, is to destabilize and to keep both allies and rivals uncertain about his true intentions, about his true position. And I think he believes that applying that madman theory gives him an upper hand and advantage. And I think to some degree he's right, because it's just not playing the traditional political rule set. And you see Europe really struggle with how to respond. Do you go hard? Do you go weak? Do you ignore it? Like, do you just continually, you're playing catch up? And I think the proof will be in the pudding on who wins or loses. But meanwhile, we're not going to see, every time you try and apply some real logic to some of his decisions, you sort of start to fall down. And so you're dealing with an irrational actor.
It's very on brand for him, isn't it?
Completely.
Completely. How he's always behaved. So you kind of know, at least from that basis, that it's going to be madman, strong man.
So it's like a Richard Nixon, on acid. He tried to do this with North Vietnam and the Soviet Union to try and scare them into doing the deal he wanted. And I think we're just seeing that on a more global basis.
I want to talk about UK startups. This might be an extremely quick section, but I wanted to have a look back. H1, UK startups, a report from Dealroom and HSBC, just some quick stats, and then we can look at if there's anything to dig into or predict. So UK startups raised 8 billion from VCs, which is slightly up on H2 24. 8 billion exceeds the combined haul of Germany and France. For context, US startups raised $180 billion in the same time period, which kind of puts into its tiny bucket. But obviously, US VC is nearly 60% of global investment. It's just massive. While London still dominates, we've had some regional stuff going on. Oxford, Cambridge, and Cardiff did $1 billion of that. And other smaller regional stuff is going up, which is great. AI startups, no great surprise here, are 30% of that bucket, which has doubled in the last decade. Although, what is an AI startup? Maybe that's a debate for another time. So, health tech and fintech combined, neck and neck with AI, and enterprise just behind that. So, UK has produced 188 unicorns, 71 still remain private, just under 230 billion in value. Here's a quite interesting stat. Half of all unicorns from the UK were founded after 2010, mostly AI and health. So, very quickly, gents, Lomax, kick this off. Any surprises? Any exciting things that we should talk about in that H1 data?
I literally think nothing. As in, like, I sometimes think in our industry there are too many reports. I don't think there's much really from this. I mean, when I was just trying to think what's interesting here. I mean, the US is 22 times in terms of capital raised the amount of the UK. I mean, we often talk about the huge disparity between the two markets, but that is a staggering figure. And actually, funnily enough, last week we talked about the disparity in the public markets, and one of the conclusions or data points we drew on was that the US public markets are 20 times the size of the UK public markets. It's interesting to see that being reflected pretty much precisely in the startup numbers too. So what's the conclusion? Lots more money. We are slightly better off than last year in terms of number of unicorns. I think we had 4 unicorns minted in the UK in H1, which is just one more than the whole of 2024. I think the one thing I do tend to look at in these reports is the number of mega rounds, or what the mega rounds were, because you can talk about venture and the industry as a sort of cohort level, but I think it's more interesting to pick out the big emerging companies. So we had 3 mega rounds in H1 in the UK. We had Isomorphic Labs raise 600 million, Synthesia raised 180 million, and Quantexa raised 175 million. So I think that's interesting. That shows, where the money is going. They all are basically AI companies, which I think we know. It's good to see those mega rounds getting done in the UK. We're still behind 2024. As a reminder, the biggest mega round done in 2024 in the UK was Wave, the automated driving company, which raised just over $1 billion in one round. So I think there's interesting things to see. Nothing particularly new. Slightly up in the number of unicorns. AI clearly playing a big theme, as we would expect. I don't know if you guys picked anything else out of this stuff, but that's my read on it.
Well, as a rule, we're going to try and avoid reports. It said UK, and I got all excited, so I put it in the docket. And also, I thought there were reasonable activity levels, reasonable numbers. But Mads, what anything in there that you would highlight or not?
Look, reports, Bish. I mean, we always said we thought 2025 would be a pretty good year. And the AI boom is clearly continuing. And if NVIDIA delivers strong earnings when they report in August, this is just going to keep rolling on. And I expect that they will. I expect that this journey has a lot further to go. Now, we'll get an early look in on the 16th of July. So in a couple of days, ASML will deliver their earnings report. But I think we're still in the early innings of this. We're not done yet.
Andrew, anything before we move on?
Good indicators, great to see some big rounds, but the same fundamentals need changing, right? Optimize the tax environment, put a sensible visa system in place so we capture all the best people, and motivate money to go into later stage growth. We know what the problems are. I saw another report actually from Tech Round. I clicked through from the link you sent through to another report, and it says, what do experts think the UK needs to do to stay as a global player in technology? It's like, we all know the answers. It's just the government's not doing it. Just doing it. It's just the same thing.
Just do it. Yeah. Lack of political will. Right. Last thing on the docket, we're going to talk about finding big tech. So I've seen this week some more control and some more EU finding big tech. So there are another layer of fines and control issues that the EU is imposing on Apple and Google, etc. Apple is appealing its $500 million App Store policy case. Google is trying to navigate serving European clients without contravening the EU's Digital Markets Act, which actually has a 10% of global annual revenue fine associated when you do contravene it. So that's a massive chunk of change. And I also saw this week that the EU is looking to scan our chats. Now, for the right reasons, they're trying to protect children. So they want to have an inside backdoor, even into encrypted messages in chats. But super high problematic, but I totally get the intent. So question for the room, how can you legislate? Obviously, we want to protect kids, but freedom from sponsorship. And Mads, maybe start with you more broadly. Are these fines a good idea? Do they ever work? Does money ever get paid? Is this even worth the EU doing?
Yeah. So nobody is above the law. And so the fines are important. When somebody breaks the law, there has to be consequences. Now, the violations, they get litigated and the fines get litigated for an eternity, but eventually they do get paid. So they are important. But I would also say at the same time, you can't regulate or fine your way to greatness. And the truth is, I don't really care very much about the fines in themselves. It's a little bit like speeding tickets. They're important, but they're dull. So I'm actually much more interested in how we can build more great companies in Europe. I think that's a more exciting topic.
Well, for Lomax, where would you take this? I mean, obviously, big tech is going to respond. I mean, is it going to be that Europe loses out? Is it going to be that it creates opportunities? Is there anything else in this beyond let the machine do what the machine does?
I don't think it creates massively to the top of my mind opportunities. I think there's a risk that we as consumers in Europe end up missing out on some products because it's too difficult, too expensive. It's a cost of doing business ultimately, the way the big tech companies will see it, right? And this is one of the EU is one of the biggest single markets in the world. So, naturally as a business, you are going to want to try and access it. And these fines generally are a cost of doing business. I mean, one thing to just don't forget, like the US does fine big tech companies, right? I think in the last 10 years, the EU's levied fines of roughly 12 to 15 billion. The US has done 7 to 8 billion. So it's obviously a lot less than the US.
It's not too far
behind. Although 5 of the 5 million in the US was Cambridge Analytica, with Meta. Right. So it was just a one-time fine. Europe is broader in terms of who it goes after and for what it goes after under GDPR and the Digital Markets Act, etc. So I think it's a cost of doing business. I think that the big tech companies will, be slow to comply, will appeal, will kick things into the long grass, will fudge things, but ultimately they will pay. But these companies have, I think, tens and hundreds of billions of collective cash on the balance sheets, right? And this is just a
cost of trade.
A cost of doing business that probably reduces their tax bill, right? So it's not the headline number. It's how they think about it. I do think that I do think on the legislation side is we need to have it. You need to have some kind of platform accountability for what happens, and sometimes in the EU they tend to be overzealous and overreach, and I think they're overreaching by reaching into encrypted messages, because where do you stop? When you start doing that, and then you really start to constrain people's use of these products, and I think that's an issue. However, and undermine trust as well. But I think ultimately some of the consumers will suffer because if there's too much legislation, we won't be able to use the products that our peers in the US have access to.
Well, I mean, it's 600 million or so of us over here, so I'm assuming they do want access to that market. But
they're
maybe
making billions
of revenue. They can,
yeah.
Andrew, anything you'd add to this?
I mean, the backdoor to allegedly encrypted messages is an horrendous idea. It's mass surveillance by design. So even if the aim is to catch people perpetuating child abuse, which is an horrific thought, it creates infrastructure for bulk surveillance of all citizens, basically. And it flips the presumption of privacy to treating everyone's private communications as, sort of potentially criminal by default. And I think there is no encryption if you're going to pre-scan everything on the off chance in future you might need to access it. And there's also no way of building a backdoor that only the good guys can use. So it's got so many holes. A well-meaning goal approached with real flaws. And then when you introduce, AI, what's to stop someone just using AI to start scanning all this content? Once a vulnerability is introduced into an end-to-end system, it can and will be exploited by malicious actors, whether they are, a very right-wing or very, very left-wing government, or whether it is, criminals. And so I think it's a pretty terrifying thought, actually, to be honest, and something that really should not happen.
Lomax? No, I totally agree. Lomax, deal of the week is yours, my man.
So this is a bit of a funny one. Normally we're talking about startups raising money. So this week we're talking about Eutelsat, which is actually a listed company, has announced that they're raising 1.35 billion euros. Eutelsat is predominantly owned by the French and the UK governments. You may remember that OneWeb, which was rescued by the UK government, was eventually folded into Eutelsat, which is creating a broad satellite operator operating across LEO and GEO, so geostationary Earth orbit and lower Earth orbit. Why is this interesting? Why is this deal of the week? I think it's interesting because we've talked about resilience, and this is a big part of that. So this is Europeans trying to get behind a big local champion to create sovereign capability within satellite infrastructure, and to really take on Starlink and military satellites in the US. So I think it's a good sign that investments are being made. Most of the money is coming from the French and the UK governments, which, as I said, were the big shareholders. The company is a just over 1.3 billion revenue company. It pales into comparison with Starlink, which at the latest check was roughly 8 billion in 2024. So it's financially a lot smaller, but it does have different capabilities. It does have, for example, Starlink has no satellites in. It's a lower Earth orbit player only, whereas Eutelsat has capabilities in both geostationary and lower Earth orbit, which deliver different capabilities. I think it's interesting. I think Eutelsat needs to rebrand and change its frigging name.
It sounds like an 80s PC. I've got my Eutelsat with my floppy disk in the corner.
But I think, look, set against the context of what we've been talking about, it's action, it's money, it's not a lot, but it's a start.
And Andrew will be happy because it's like, sovereignty, control, infrastructure, defense, and happy. Andrew, what's on your agenda this week? What's in your calendar? Anything exciting? Any beachfront condos that you're frequenting? Or
no beachfront condo, although I am going to invade Lomax's beachfront office condo.
I'm so coming down. I'm going to come down after the kids go back to school, I think. Yeah.
Well, speaking of peak LLM, I saw an interesting deal, which wasn't ours, but did you see PoreSense AI done in the UK this week?
No.
Which is developing AI to interpret pets' emotions and provide therapeutic interventions aiming to revolutionize pet care by making pets happier. So maybe we are at peak LLM. Maybe we really are. But no,
maybe
this
that's
week
maybe that's something the EU won't regulate. Actually, that's at least
really happy. Even happier dogs.
Happy.
And as an aerophile, I'm happy. I'm excited. End of the week is the Royal International Air Tattoo out of Fairford. It's the world's biggest military air show. So I shall be geeking out there at the weekend. Looking forward to that.
Lovely. Lomax, what are you up to? Beaching, surfing, hanging with the kids?
LP's in town this week. So yeah.
Okay, so shirt on, clean pants, got it.
No, get them painting the walls.
Kind of
Get them painting the walls. Get them with some paintbrushes. Put them to work.
Thank you, gents. It's always a pleasure and a gift. I'll catch you next week.
Bye bye.
Ciao, ciao.